in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Federal are not affiliated. You are listening to the Spend Life Well Show with Kingdom Advisor Mark Trice and Jesse Hamilton. Mark and Jesse are passionate about seeing you spend life well. If you want to save for and invest in the future, then this show is for you. Call now and join the conversation with your financial questions. 512-452-1120. 512-452-1120. Mark and Jesse will answer your questions and discuss practical financial principles based on a foundation of biblical wisdom. So if you're ready to quit worrying about your finances and begin to spend life well, then call 512-452-1120. And let's meet your hosts, Mark Trice and Jesse Hamilton.
Well, good morning, everyone. I'm Mark Trice, Certified Kingdom Advisor Mark Trice, and I want to welcome you to the Spend Life Well Show, where we apply biblical wisdom to your financial life. I'm joined in the studio today by my loyal co-host and fellow financial professional, Jesse Hamilton.
Hey, everybody. Welcome to the Spend Life Well Show. Glad you're here.
Jesse, our verse today is Matthew 6:19 through 21, and you know this one because we've got it on the wall in our offices.
Yep.
Do not store up yourselves treasures on earth where moths and vermin destroy and where thieves break in and steal, but store up for yourselves treasures in heaven where moths and vermin do not destroy and where thieves do not break in and steal. For where your treasure is, there your heart will be also. You can call us right here in the studio. We want to answer your financial questions. Maybe you've got concerns about the market, what's going on around the world in Ukraine. You can give us a call at 512-452-1120. That's 452-1120. Jesse, what do we have in store for the audience today?
Yeah, so today's program, we're going to discuss what the Bible says about investing, as we always do. We're also going to delve into values-based investing and how you can honor the Lord with your investments. We're also going to talk about the financial markets, what happened this week, including what every investor needs to know to protect your wealth. We're also going to dive into our mailbag if we have time, but we want to talk with you. Once again, this is a live call-in show. We would love to hear from you. Give us a call, 512-452-1120.
So, Jesse, our hearts and prayers go out for the people of Ukraine.
Absolutely.
Right now, they are standing up to an onslaught of weaponry and an invasion into their sovereign country. And we know there's really a humanitarian crisis emerging there and evolving. And we certainly want to make sure that we keep our thoughts and prayers with the people of Ukraine right now.
Absolutely.
It was one of the big topics that we were talking about. I just got back from the Kingdom Advisors Conference down in Florida last week, which was
awesome.
Much warmer than it was here in Central Texas. So
I bet it was.
Yeah.
What was the weather like down there?
Well, let's see. Y'all are in the 30s here, or maybe in the 20s, and I think it was maybe 85 every day down there, and sunny.
Sounds pretty nice.
But just to make you feel better, I didn't really get outside too much.
Okay.
So I had to stay inside the conference facilities and stuff. But it was a great conference. We it's an annual conference that this year had over 2,000 Christian financial advisors. If you're ever looking for a certified Kingdom Advisor, you can go to kingdomadvisors.com. That's kingdomadvisors.com. Put in your area there and find a professional, and you can find someone that is trained just like we are in biblical wisdom and tying that to your financial life. But 2000, we do a lot of worship. There were some great speakers. My wife got to meet Lisa Turkish. We also had some other great speakers, Ron Blue, to note. Of course, we met all the folks with Kingdom Advisors and MoneyWise, of which we're a sponsor, Rob West, Tony Stinson, and those guys. And it's great to see all of them and worship together and learn more about ways that we can serve our clients from God's perspective about your finances. So
it's really exciting.
Yeah. And so, you can also join us today on the program at 452-1120, or you can also send us an email anytime during the week at radio@spendlifewell.com, and we'll respond to you on the show if we see it, or within 24 hours if we don't get to it during the show. but it also might be pulled out of our mailbag for an
Right.
upcoming show. Jesse, today's a really special day, but there's some other
Yes, it
ways
is.
people can watch us.
Yeah, so you can watch us on Facebook. We would love to see you on there. We live stream it on our Facebook. You can also join us at spendlifewell.com/radio to get all the information about our show and how to contact us and how to send us a message. You can also message us on Facebook. Really, however you want to contact us, we're happy to listen. And then, yes, Mark, today is a special day because right after the show at 9:15, we are going to broadcast our monthly market update where we talk about what's going on in the stock market and the bond market and the whole financial system of the country and how it might affect you.
A lot of stuff to talk about today because we've been seeing a lot of volatility in the market, and it is impacting people's portfolios. But the one thing that I've for folks that aren't clients that have been calling us in the last few weeks is that most people have been trying to ignore it, and that's not the way to deal with your wealth.
Hmm.
That's not being a good steward of the blessings that God has given you.
Right. There's a
But
big difference there between being patient with it and
yeah,
ignoring it.
and Jesse, why don't you go ahead and post the link to that webinar on a Facebook and maybe YouTube or something like that, so
Right.
people can see that if they're watching online. And you just basically, I mean, you can also just go to our website at spendlifewell.com/radio, and you'll see the link there to register for that. Even if you can't join us at 9:15, you're getting out and running errands and things this morning. Maybe you got some kids
Hmm.
soccer games and basketball games this morning. If you register, we'll send you a recording next week once we get that all cleaned up for you. So we want you to hear this one. This is a very special program this month, which we do every month. But in today's program on the show here, I want to talk more about the biblical perspective on investing. Okay, and the thing that we have to realize as Christians or believers is that investments are our tool, but they're not really an end to themselves. And I hear this because a lot of people want to invest in certain things because they want to get rich quick, and that's not really the way that we need to approach that. But the Bible has a lot to say about investments and your investing decision making. The Bible talks about diversification.
Hmm.
The Bible talks about having a long time horizon. The Bible talks about seeking professional counsel and professional wisdom. The Bible talks a lot about, and Jesus especially talks about our motives for investing. And then it just gives us a lot of information about God's perspective on investments and our wealth.
Hmm.
And you contrast that, Jesse, to the worldly perspective,
Which is very
w-
different.
very different. It says,
Hmm.
hey, let's get rich quick. You have a short time horizon because you don't want to miss out on something. We want to live our lives by spending and consuming first.
Hmm.
And in that situation, time is really an enemy for those from the worldly perspective. There's also a belief that the market always goes up, and the world also teaches us that we can always buy low and sell high, and that's just getting into timing and stuff like that.
Well, the talking about that worldly perspective, I'm immediately brought back to about a year and 2 months ago when the meme stock thing happened, where people who have never invested before in their entire life see something blowing up on their social media, and they say, "Hey, I want a piece of that. I want to get rich quick, and I want to dive in and start investing." But what they don't,
FOMO,
yeah, FOMO. But what they
fear
don't
of missing
know
out,
is that it's not investing. That at that point, you're just betting that it's going to go up for a completely unjustified reason, and
gambling.
gambling,
Right, right.
right? And so that's immediately what comes to mind for me.
Yeah.
But moving forward, we know that economic uncertainty is going to happen,
If
right?
there's anything that's certain, it's uncertainty.
It's uncertainty, yeah. Um, Economic prosperity is certain only in retrospect, right? It's
Well, you think
really
about it, the economy, the economists out there, no one ever asks them and questions them at the end of the year to see if their forecasts were right,
right.
right?
Hmm. Yeah, and you look back a year or two, 5 years, and you're like, oh, if I could have just made a better choice right there, right? But we know that economic cycles are normal. That's been
That's
happening for
that's the ups and
decades.
downs. Yeah.
It's
Yeah.
been happening for hundreds of years. That's just the way that our economy works around the world. and the future cannot be predicted as much as people would like to think so.
So, what does the Bible tell us to do?
Well, the first thing that we're going to talk about is the Bible talks about that we should save and invest first. So I'm going to read Proverbs 24:27. That's a great verse that we like to talk about. It says, "Put your outdoor work in order to get your fields ready. After that, build your house."
So basically, build your business, build your personal financial situation, then you can invest in different things. I think that's my interpretation of it.
I think so too. I don't think he's meaning sleep on the ground while you grind or plow your field.
Yeah.
But yeah, I think you're correct there.
Well,
Um,
and then Proverbs 28:20 also talks about preservation
mhm.
and steady growth of capital, and that's a very fundamental thing that we practice here in our business here as financial advisors and active risk managers. And that
Yeah,
is, we want to preserve your capital as best we can, and have steady growth, not the crazy roller coaster ride.
right. Yeah, I'd like to read that verse because it's just
Yeah,
really rich.
go ahead.
A faithful man will abound in blessing, but he who hastens to be rich will not go unpunished.
Yeah,
I think that's a
that's so
great one.
true. What about time horizon? Should we have a short time horizon? Let's get quick,
No,
rich, quick.
no. Unfortunately, as much as people would love to get rich quick, and they think that investing is just going to be a rocket ship to the moon, the Bible teaches us that we're supposed to have a long-term horizon for our investments.
Investing is a journey, not a
Hmm.
sprint. And
Yes.
so, given that, and you can find verses there in Luke 14:28, but also time. Time kind of fits in two different bills. Time can be a tool for you because the act of compounding over a long period of time can be very advantageous. Proverbs 6:6 through 8 talks about that. But
Hmm.
time can also be an enemy. Proverbs 28:22, the stingy are eager to get rich and are unaware that poverty awaits them.
Right.
And that we could go back to recent times. You were talking about the meme stock investors and the Robinhood investors. So many of them had such a fear of missing out that they jumped in right when things were peaking, and they have not made their money back. I mean, we heard horror stories of, in fact, there was even a story of a young man killed himself because
Hmm.
he had lost a lot of money, and that was just very sad. But
Right.
and then cycles. What about cycles, Jesse? They're just going to happen. You're going to
Yeah,
have peaks and troughs.
it's funny that we just said we talked about the economy and the way the economy works. The Bible talks about the fact that cycles are inevitable, and they're going to keep happening. That's just the
Yeah.
way that this world that God has created for us works.
Yeah. And then in Ecclesiastes 11:1 and 2, Solomon talks about diversification. And the verse basically goes like this: ship your grain across the sea after many days. You may receive a return, invest in 7 ventures, yes, and 8. You don't know what disaster may come upon the land. And he was a wise counsel, and sought wise counsel, and that's what you should do as well.
Hmm.
Seek wise counsel, avoid high debt. We talk about that in Proverbs 22:7.
Right.
And more importantly, I think seeking wise counsel, Jesse, will allow you to have a counterpart or an accountability partner to help monitor your anxiety. But
Right.
remember what Philippians 4:6 and 7 says, right?
Yeah, that's a great one. That's one of my favorite verses.
Once you got that up on the screen, you
Yeah,
can
I
read
got it
it.
right here.
I know you got your
Do not
Bible
be
open.
anxious about anything, but in every situation, by prayer and petition, with thanksgiving, present your requests to God. And the peace of God, which transcends all understanding, will guard your hearts and your minds in Christ Jesus.
Yeah, that's so true. And
That's something that we talk with clients all the time. We love to pray with clients and have that relationship with the people that we work with because they do come in and it's okay. They come in and they say, "I'm anxious about my portfolio. What's going to happen?"
yeah, yeah. And you have to establish limits on the amount you invest. In a segment here later in the show, we're going to talk more about that.
Hmm.
But I think one of the final things before we go to break here in a little bit is just simply making sure that if you're married, you have spousal spousal unity in those decision making processes, and that's
Yes.
Ephesians 5:21. We don't need to read that. Most of you can look that up or whatever. But having that unity in decision making is so important
It's
when it
very
comes to
important.
investing. When we come back from into the next segment, we're going to spend a little time talking about what is going on in the markets. How do we make sense of the world and the economy? And I think that we'll spend some time kind of dissecting what's going on there.
Hmm.
But you can call us in the show because I'm sure you've got questions about what's happening, maybe to your portfolio, your
Yes.
401k. Give us a call at 452-1120, 452-1120. When we come back, we'll dive right into that. You're on listening to the Spend Life Well show.
Join us on Facebook to see the fun that goes on at the Bridge Austin. There's behind-the-scenes pictures, live videos, and news. We have a wealth of faith to share with you. Just look for the Bridge Austin on Facebook and hit like.
Do you worry about your finances? Thinking about getting kids through college? Or just dreaming about retirement one day? Hi, I'm Certified Kingdom Advisor Mark Trice and founder of Clear Vista Financial here in Central Texas. You know, Scripture teaches us not to worry, but to prepare for the future and to commit our plans to the Lord. But sometimes that is hard to do in practice. Wouldn't it be nice to have an advisor, one that shares your faith, who will guide you along the road towards your financial goals? Visit us at spendlifewell.com or give us a call at 800-491-4508 for a complimentary consultation, and we can show you how to spend life well. Visit us on the web at spendlifewell.com. That's spendlifewell.com. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
All right, everybody, welcome back to the Spend Life Well show. My name's Jesse Hamilton, and I'm joined by Mark Trice, as always. And we are going to dive into the market update section where we talk about what happened in the financial markets this week. We would love to hear from you, hear your questions about the market. That number is 452-1120, and we will answer your questions live on the air. But let's dive into this, Mark.
Yeah, I think we should post a video of people riding a roller coaster
That'd
because,
be
when you
funny.
go over that first hill, you go up the big giant hill, and the most roller coasters are the same way. And then all of a sudden you're like, I really didn't want to be on this right when you get to the top, and it just goes slamming down, and you're like, oh, that's kind of like what's happening in the market.
Yes, it is. So we like to talk about the different indexes that help us see what's going on in the market. Let's start off with the S&P 500. This is the 500 largest companies in the United States by cap weight. So that means the big companies pull it at a more aggressive rate than the smaller companies. But that's a very common index that people like to look at to see what's going on. And this week, it actually had a little bit of a rally at the end of the week and closed up 1.83%. And that is a part of a minus 8.32% for the year. So minus 8 for the year. And that can have a pretty dramatic effect on your portfolio. If you have a 401k that's holding this index, or maybe you have a target date fund or a 60/40 fund, a lot of these companies are going to be in your portfolio, right, Mark?
Yeah, and because that's the most common mutual funds in your 401k and K plan are going to be a large cap stock fund, which is basically many of them just mirror the S&P 500.
Mm-hmm.
Now it's down actually close to 9% almost already year to date, and that's a big deal because that's money that you worked hard to earn, and you're losing value. And believe me, I know we see this all the time, Jesse. People come in, we ask them about their 401k, and to our amazement, they say, "Oh, my employer's taking care of that. My employer is managing that for me." And we're just like, "Oh my gosh, you don't realize what's happening." When the law changed in the 70s to shift us away from the traditional pension plan to so the responsibility was put on the employer they shifted away from that to put the responsibility for your retirement on the employee. And many
Right.
people haven't woken up to that yet. Number one, they're not saving enough. But number two, they're thinking that the employer is the one actually managing their investments, and it could be
That
nothing
is
further from the
false.
truth. Yeah. So wake up,
Hmm.
guys and gals. You got to pay attention to that. So how'd the NASDAQ do?
Yeah, the Nasdaq is another index we like to look at that's really tech heavy, so it tends to fluctuate a lot. A lot of companies that use leverage and have a lot of that sort of thing going on. Minus 2.78 for the week, so it dropped a little bit, and the hard pill to swallow here is minus 14.9% year to date. So that's well into correction territory and approaching bear market territory.
Yeah. I mean, well, if you go back and look to back all the way to November 22nd when
Hmm.
the peak was. I don't know what that data is. I know we're going to cover that in the
Yeah, we definitely
webinar.
have that in the webinar.
Yeah, and so that's a big downtrend. And guess what causes tech-oriented type companies because of the price to earning ratios and all these different things and forward-looking assumptions and stuff. The one thing that really creates headwinds for technology companies are rising interest rates.
Hmm.
And we are going to more than likely, knock on wood, see at least a 0.25% rate hike on March 15th by the Federal Reserve. Okay.
Yes.
Now, I would not be surprised, but the markets will be surprised. I would not be surprised if we see a 0.5% increase, because one of the things that the Federal Reserve is concerned about at this point in the situation in Ukraine has only exacerbated this, is they are very concerned about really stagflation. And
Hmm.
stagflation, Jesse, if you remember from your classes and your graduate work, stagflation is when we've got rising inflation or high inflation
Hmm.
and a contracting economy. And
Yeah.
it is a self-fulfilling mechanism that is very difficult to control. And
And
our
it's an
most
unpleasant place to be as a consumer.
absolutely, because you've got, your jobs are shrinking up, you maybe not getting as much pay, but the cost of goods and services are going up. Anybody been to the gas pump lately?
I don't
I
want to
was
talk about it.
I was seeing, I mean, it's gone up about 50 cents in the last week.
Hmm.
So despite what President Biden tried to do by releasing some, basically a day and a half worth of oil reserves from the strategic oil reserves for the U.S., the cost of gasoline is going up. So I think I saw here in Texas the average is around 3.75, which is
Yeah.
really expensive for what we were paying a year and a half ago.
Hmm.
Um, so you're going to have inflation. Stagflation's an issue, and the only way to really stop stagflation is if you got to go back to the late 70s, early 80s. And Paul Volcker was the Federal Reserve chairman there. And what they had to do at that time to stave off stagflation from happening was they had to create a recession. Now, this is really troublesome when you're using the tools of monetary policy to purposely cause the country to go into a recession. And that's the only way that they know how to stop inflation. And Ukraine
But
has only exacerbated that problem.
their goal though is to do baby steps where they maybe notch it down a little bit and see how it reacts, notch it down, see how it reacts, right?
Well, and you're,
And it
you're
doesn't work
right.
like that.
That's their hope, Jesse. But uh, you haven't lived through a couple of recessions. You've lived through one, I know for
Yeah.
sure. But the Federal Reserve is usually late, and they're late this time.
Hmm.
They're late to the party to try to cool down the economy in a very gradual way. So I read an article this morning in the Wall Street Journal, and they're expecting 9 rate hikes this year. Nine
Wow.
rate hikes, and those would be at least a quarter point each. So they've got to raise the overnight Fed funds rate, which is about close to zero right now.
Hmm.
They've got to get it up to around 3.5% before the economy will truly start cooling off. But you know what? They're late to the party. They overestimated inflation. They'll start doing their No, they'll basically start unwinding the quantitative easing that they did. We'll talk more about this in the webinar. You can go sign up for that at spendlifewell.com/events. And they'll be too late to take off the brakes. And so the way to deal with this is to get out of the way. But
Hmm.
we punt so much money into the economy during the pandemic that we are just causing ourselves a world of hurt for that.
Right.
So anyway, I'm sorry to interrupt your
That is
thought
okay.
process there, but given the market update, but this is a real concern. I'm not trying to be an alarmist because I know we just read the scripture about do not be anxious about anything. And we're not. We're not anxious about those things because our methodology for managing our clients' money is so different than the majority of the world and the financial industry. We're not going to sit there and buy you a portfolio and just leave it alone. We're going to make sure that we're making tactical moves to help you avoid some bad
Hmm.
situations. Emerging markets have been real bad in the last couple of months.
Right.
Energy and utilities have done really well. So those are the things our clients are investing in, of course, commodities as well. So how's the bond market doing so far?
Yeah, let's talk about bonds because whether you know it or realize it or not, probably most of you listening to this own a significant amount of bonds in your portfolio. That's just the way the industry works right now. Most advisors are putting their clients in a percentage of bonds based on their age, but traditionally people would run to the treasury, long-term treasury bonds as a real safe haven, right, Mark?
Yeah, that's true. And
So the long-term treasury index that we follow is actually down 6.94% for the year. Um, it had a slight 0.9% increase for the week. It had a good day on Friday because of various interest rate scenarios and the stuff happening around the world. A lot of people are running to safety right now, but
yeah, I'm glad you said running to safety because when people run to safety, the yields on longer term bonds tend to drop.
mhm,
But the Fed is trying to do the opposite. They're trying to
right.
increase those rates. So you're going to see the opposite effect when the Fed starts raising interest rates. In fact,
Hmm.
we were shorting some of those bond markets first few weeks of the year.
And it
But
worked out well.
you've seen the 20-year or the 10-year Treasury, which is kind of tied to a lot of things about the mortgages, car loans, things like
Hmm.
that. That's gone up over 20% in the last quarter. I mean, that's the yield. That means you're paying more to borrow for a home, for a car. Your interest
You're
rates on
right.
your credit cards probably went up. So, folks, you got to pay attention to this because it's costing you more and more money. And there's nothing really you can do about it except to prepare. And as Solomon says, you want to be wise and spread your investments in different places. But you have to be careful about that when we're looking at that shift from we've had rates, low yields for so long. Now they're going to start going up, which you would think would be helpful, but it has
Hmm.
the opposite effect on your bond portfolio.
Right.
And Jesse, remember that most financial advisors say the way to reduce your risk to the stock market is to buy more
Buy more
bonds.
bonds.
And folks, that's awful because when you're in a volatile interest rate environment, the bonds are not a safe haven. The bonds are not a safe haven. That's not a way to reduce your risk. But that is the typical mantra in the financial industry is, hey, just get some more bonds and you'll be okay. But
Yeah,
you've seen this year as Jesse reported, hey, both of them are going down.
that's a philosophy that works really well on paper. If you're in a classroom and you're talking about theories, it really makes sense, right? But this is the real world we live in, where interest rates are the key driver of what the Fed is deciding to do. And it just doesn't work like that.
Are you going to go back and ask for some tuition money back, Jesse? Because that's what they taught you
Yeah,
when you're working on your MBA. That's what they teach you, but
they do.
that's modern portfolio theory for you. And we've proven time and time again that modern portfolio theory is a dangerous tool to put your trust in. So, any
Right.
other updates, Jesse?
Yeah, there are 11 sectors in the economy, and a lot of the way that we manage money is looking at those 11 different sectors to see what's working and what's not working. And like Mark mentioned earlier, energy is the only sector of the 11 that has made any positive return this year. And it's actually made a very strong return. The specific index for energy that we follow is up over 30% on the year. But this week, we actually did see utilities and actually, briefly, we saw real estate, industrials, and healthcare have a positive return, but they are not showing strength at all.
Yeah, and don't forget commodities. Gold,
Commodities,
silver.
absolutely.
A large portion of the world's commodities come from, guess what? Russia and Ukraine, and we're talking from um, uh, barley and different types of ingredients in beer.
Hmm.
For you guys that and gals that like a beer every once in a while, the price of beer is going to go up faster. But also other elements like uranium, palladium. We've seen gold go up quite a bit. That's not a recommendation to invest in
Hmm.
anything. But all this means is the cost of those inputs that go into manufacturing these products are going to be going up and up.
I think
So
we mentioned it earlier, Mark, but I'd like to have a little quick conversation before we end this segment and move into our third portion. But the situation with Russia and Ukraine is heavily dependent on the oil trade in the world, right?
right,
And
I mean,
so,
Russia supplies Europe the majority of their oil reserves, or a
right.
large portion of that.
And everybody wants to talk about all these sanctions, which can work, but what they're not talking about is they're not cutting off Russia from what matters most.
Oh yeah,
And
the
in
oil is
that
still
case,
flowing.
yeah, in that case, the the United States is thirsty, thirsty, thirsty for oil, and they're not going to cut that off because the country would just fall apart without
I,
oil.
I'm
We're
curious to know
addicted
what
to it.
our listeners think. You can call us and give us your opinion, 452-1120. I think that's something we need to talk about because we're sending to Vladimir every day about $700 million in cash for Russia's oil.
Right. And
And
the same thing is happening with Italy. You know, those wealthy Russians like to buy designer bags, whatever brand you want to pick. They cost a lot of money, and Italy makes a lot of money, right? And so, but they're not sanctioning those items because that's where they make all their profits.
right. And I know a lot of people will think that we need to rush in and send troops, and many of us don't. I think the United States is a little bit wary of wars and conflicts.
Hmm.
But we really haven't caused a lot of damage. Now we have the world has gotten together and cut off Russia from most of the financial payment system called the SWIFT
Yes.
transaction system with that, but that's going to have ramifications as well that a lot of people aren't talking about, and that
Hmm.
is if the global community can decide to cut off a country's financial system, people are going to start building up their own reserve currencies. Right now, the reserve currency of the world is the dollar. But, China is working on this to hopefully have the yuan as the reserve currency of the world. I know there are a lot of countries that think maybe Bitcoin could be that. But you know what? We don't know. And the actions that we're taking now, regardless of the outcome, will have very significant ramifications for a long time to come. And so, we just pray for those folks in Ukraine. That's probably the most important thing. And all the people
Hmm.
that are being cut off, they were supposed to have a ceasefire to allow civilians to evacuate, and Russia's already violated that. But when we come back here in this next segment, we're going to talk more about what the Bible has to say about investing. We'll talk about values-based investing and some things maybe you hadn't thought about that you could probably do in your portfolio. But I want to hear from you. I want to know what you think about all this stuff that's going on in the world. Answer your questions and concerns about your situation. We'll take some questions from our mailbag when we come back. But give us a call here in the studio at 452-1120, 452-1120. And when we come back, Jesse, I want to dive into biblically responsible investing, and I think
Great.
that's
That'll be
something
an
that,
awesome conversation.
yeah. And so we're excited. Thanks for listening to us on the Spend Life Well show. We will be back here in just a few minutes.
Take the Bridge Austin with you wherever you go. Download the mobile app, stream the station live, listen to the podcast, and have all the great Bridge content in the palm of your hands. Just search for the Bridge Austin in the app stores.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
Welcome back, everyone. I'm Certified Kingdom Advisor Mark Trice. I'm joined here in the studio by my cohort, Jesse Hamilton.
Hey,
Jesse,
everybody.
we just finished up talking about kind of a little bit of a market update. A lot of things are
Yes.
topsy-turvy this year, which is not normal. We've been used to having a really good early months of the year in market performance and stuff. But, if you've got a question about a ticker or a mutual fund in your portfolio, give us a call here in the studio at 452-1120, 452-1120. But Jesse, I think we got a question from our mailbag.
Yeah, we do. Let's do that real quick. This comes from a listener named McKenna.
Okay.
So McKenna, we hope you're listening. Thanks for sending us a message. And this is really applicable, especially to the younger generation right here. It says, what's the best way to get into trading stocks? I know I'm late to the game when it comes to using like Robinhood or other apps, but is it still smart to give it a try?
Well, I think it's smart to, once you've built a good emergency fund, it's smart to make sure that you're participating in your workplace retirement plan, or maybe you can open up an IRA. That's where you need to get started. Now, we're going to go back and I think we're going to touch on this in just a minute, but you got to resist the temptation to get rich quick. And I
Right.
think too many of us, and this is one of the things that, we talked about extensively at the Kingdom Advisors Conference, was, what's the view of our heart? What's the condition of our heart? And if we're investing to try to get rich quick or make a quick buck, that's not the way to go. The God tells us to that investing is a very methodical, very deliberate, and a long process. And so I would encourage you to take advantage of that workplace retirement plan first. You can go into a what we call a life cycle fund or something like that, or start with a mixture of large cap funds and small cap funds, and maybe some bond funds to get started. You're just trying to get going with that, and you will have ups and downs through that process. But I think a lot of folks, especially the younger generation, they read these meme stocks, or they're looking at Robinhood or different things like that, and they're getting this advice from people that are not really have your interest at heart. And in fact, a lot of these things are, I would consider, pump and dump type schemes,
Mm-hmm.
where the whole idea is to suck in a lot of people to push the price up, and then you see the initial investors try to get out and take their profits. And meanwhile, we have a bad behavioral tendency as investors to not to want to sell things that are doing poorly. We want to wait for it to come back. And that's
Mm-hmm.
not really the way to do it, especially if you're trying to follow a trend that's taken off and really gone to the stratosphere. I think, what was the big stock last year that was impacted? AMC, wasn't it? American, or
Yeah,
no, it was
GameStop.
GameStop, and GameStop hasn't really had good financials in years, and their stock price has been dragging along the bottom. Suddenly it went from less than $5 a share up to, I don't know, what did it go up to, $400 a share or something like that?
Over 400.
Yeah, something crazy. And there are no fundamentals about that company that
Yeah,
said this is a
they
good
created
company.
no new value.
Right.
It was just chaos.
So all those investors did is you made the internal shareholders, the executives who own the shares of GameStop, you just made them wealthy.
Mm-hmm.
And the whole idea was, especially with the meme stocks, was we're going to stick it to the hedge funds. Well, you made a lot of people rich, and they're probably not the people that you thought. And meanwhile, so many investors are still underwater in that. So I just encourage you to be careful. Slow and
Yes.
steady. Think of the tortoise and the hare, the parable about the tortoise and the hare. Slow and steady wins the race. And just get in the habit, McKenna, of investing or saving a little bit every month into your workplace plan. If you don't have one, then you can set up an individual retirement account at your bank or with someone like us. We'd be happy to help you. Great
Yeah.
question, McKenna.
Two points I'd like to add really quick. The We talked earlier about, of course, seeking wise counsel. You mentioned that, Mark. Don't be taking an advice from somebody who doesn't really understand what they're talking about. But also, these phones that we have right here, the software is written to be fun, to be engaging, and to get you to keep doing it over and over again. So just keep that in mind. The apps that you're going to that you would use to trade individual stocks are designed to give you a reward, so you keep doing it and you get addicted to it. Just keep that in mind.
Yeah. And so I'm reminded of that brief overview that we gave in the first segment. And that is that, there's a biblical worldview and there's a worldly perspective on investing. The biblical perspective says we need to try to preserve what we have and try to create steady growth of our capital.
Yeah.
And the world says get rich quick as fast as you can because you want to have that mansion just like the dude down the street, right?
Mhm.
The Bible also talks about with investing having a long-term horizon. The world tells us, hey,
Pick a
buy a
hot
meme
stock.
stock. Yeah, get the hot stock and you'll make money. I can't tell you the number, and it's usually the fellows, right? The fellows they're playing golf with one of their buddies, and the buddy says, "Hey, you gotta invest in this. I've made a ton of money." And the thing about that is it's in a short time horizon, and most of the time your buddy is not going to tell you when he loses his shirt because he lost all his investment. So be careful about that. What else does the Bible say about investing, Jesse?
Well, let's have a quick conversation about what truly is an investment. What does that mean? The first definition here that I would say is it's something that's purchased with one or two expectations to grow in value or to create a yield or return.
Okay, that sounds reasonable.
Very basic definition there. You
Yep.
buy something so it grows and or it pays you back.
And do we hold it forever?
Uh, Depends. Most likely not. But like we just said, we do want to focus on that long-term horizon.
So an investment is also something that can and will be sold when it's accomplished its purpose.
Yes.
Excuse me, when it's accomplished its purpose, or it cannot and will not accomplish that purpose. So,
Mhm.
folks, you got to realize that sometimes you really got to look at the investment and say, this is not working out, and it doesn't
Right.
look like it's going to work out. I need to preserve what capital I have and reinvest in something that is performing better. And this is our
Mhm.
philosophy at our firm, but it's not the philosophy of the financial industry. The philosophy of the financial industry is buy and hold as long as you can, and we'll rebalance. And when we rebalance, we're going to sell the winners and buy the losers. Makes no sense, but this is what's happening with your portfolio if you're not paying attention. Now, one thing I want to say before we kind of go on to, because we also want to talk about, what's not an investment, right? But
Mhm.
I think there are times to invest. I mean, in previous shows we've talked about, the order of things. You have your income that you earn. And of course, at the top of the list, after we get that income, we want to give honor back to God and give some of that away.
Mhm.
We got to pay our taxes, we got to pay down our debt, and whatever's left over is our net spendable income, right?
Right.
And that net spendable income is used to fund our lifestyle, and it's used to save for short-term things and also to invest in long-term goals. But notice that's the order that we go in. We give first, we pay the taxes that were due, render unto Caesar what is Caesar's. We pay down our debt or eliminate that debt, and then everything that's left over is for us to enjoy, to use, to save, and invest. So I want people to realize that because a lot of times people just look at it and say, "Well, I need to invest so I can pay off my debt." Well, no, that doesn't happen. That's the opposite
Mhm.
order. But let's talk about some things that are not investments because I think a lot of people think that they are, and they're really not.
Yeah, so A lot of people like to say, my home is an investment. And it depends on what your definition of an investment is, but we'd like to argue that it's not. We had a wonderful client that we met with a couple weeks ago, and he said, my home was my best investment we've ever had. It made me $5,000 a month for an entire year.
Yeah. And that's because of the housing market in Austin,
Hmm.
right?
Yeah.
And he's not incorrect. In other words, the value of the home did increase over time. If you're living in the Austin area, you know that it increases about every 5 minutes, but that will come to an end, and you can't exactly go down to the Circle K or the or a Starbucks and cash in
Your
your
house.
home. There are a lot of factors there, and one of the big factors on the value of that home is how much does it cost to borrow the money for that mortgage. And we just talked about in the previous segment that's going to go up.
Hmm.
So we don't believe that homes are an investment. We hope that your home goes up in value over time. That's great because if we have inflation, you would expect it to. But you got to back out inflation as well. So he was making over 5% a year in his home, but inflation was going up 6. So was he really making money on that investment? Yeah, there's some conversations we had to have with him. What else is not an investment?
Your car.
Well, yeah. I mean, think about it. When you drive off the lot, that shiny new vehicle, I don't care what it is, goes down in value about 20%. In fact, it's a depreciating asset.
Right.
And while we think it's important for you to pay off those car notes or just pay cash for a car, know that that's a depreciating asset. It's not an investment.
Yeah, we did mention a couple weeks ago that we're going to try to do an entire segment on cars. So send us your questions that you have on cars, and we'll try to write up some very useful information sometime.
All right. That's good. What else? This is a
Uh,
very
you're
popular time um, for people getting engaged.
right. So let's talk about personal items like a diamond ring.
Yep. Yep. That's an
Not
investment, right?
not necessarily an investment.
No, it's not.
It might not be a depreciating asset.
Yeah, it probably is not depreciating in value, but if you think that a diamond ring is an investment, then you might think that your wife is an investment too. So be careful about
They're
that.
our
Diamond.
greatest investments, Mark.
Oh, yeah, that's true. That's true. But diamond rings, jewelry, not investments. What else is not an investment, Jesse?
Uh, the things inside your home beyond your jewelry, like your furnishings and your other things that you like to put inside of your home.
Yeah, and that's good. And the same thing if you happen to be blessed enough to have a second home or a vacation home, we really shouldn't look at those as investments because of the illiquidity of those investments. And so you just have to be careful because a lot of people will tell you, "Oh, buying a home is a good investment," right? That's your place to live. And if you can't afford that home or you lose a home, guess what? You've got no place to live. And so,
I
be
think the
careful about
difference
those things.
here is calling it an investment. We are not saying that you don't need to have a home, because you need to have a home, and
Yes.
there are very, very good ways to buy a home that can be beneficial to your financial life. But it is a pure sense of the word investment. We're arguing that it's not.
So, folks, we got a few minutes. You can still send us your calls into the studio, 452-1120. There are really about 3 different strategies of investing. One
Uh-huh.
is accumulation. You've got preservation and speculation. Now, all 3 of these, and most of us are in the accumulation phase. And maybe if we're in approaching retirement, we're thinking more about preservation, but we still need to be accumulating because we have a long life ahead of us. And then speculation is where we get into the, I call it gambling. Think about, the gold rush in the 1850s in California and stuff and Nevada. Those fellows were typically called speculators, right?
Right.
The miners and things, they were speculate because they had no clue if they were going to strike gold or not. So you got accumulation, preservation, speculation. And then, the things that can impact your investments are all the things that we've been talking about every show. You've got inflation, you've got deflation, you got tax law changes. How about the monetary system collapsing? I hope that doesn't happen. And then guess what? You got political upheaval, like in Ukraine. And these are things that are always going to impact your investments that are out of your control. But the Bible tells us to pray without ceasing. Don't have worries and so forth. But there are always going to be things competing with your investment objectives, whether it's accumulation, speculation, or preservation. But you always want to be trying to maximize your growth. Maybe you're trying to maximize your income. You want to make sure that you got plenty of liquidity. You want to minimize your risk. And we're going to talk, I think, Jesse, in an upcoming program about being morally responsible with our investments. And I think that that's a big deal because we think we in our shop believe that does it make a difference where I invest my money? The answer is yes, and we're going to be talking about in an upcoming program, values-based investing. But we can help our clients if they want to invest with their faith and according to their Christian values. We're going to be talking to you about that because
Mm-hmm.
that impacts. God does care about where we shop, what you look at, what you drive, how much you give, and where you invest.
Right.
And we were reminded from the early scriptures, early passages in Genesis, that God owns it all. And talking about wise counsel, Jesse, you can call us, but God's got the ultimate wise counsel. Hey, Daniel, real quick, let's try to take a call. We got Craig calling in. Craig, what's your question?
Hi, how's it going? You guys got me?
Yeah, we got you. Go
We
ahead.
got you.
Awesome, 5x5, man. So first, thanks for guys coming out and doing what you do, man, and talking about this kind of stuff. I think it's a really, really important time and climate right now, especially given the current state of affairs across the globe. I think it really doesn't matter what your overall opinion or political affiliations, positions are on these kind of things. It's more about the preservation of life and to go and engage in this knowledge transfer to help each other live better lives. People inherently mesh better, are happier. They do better work when they have a more nurtured and a more grounded life in general. And so, when we talk about these kind of things, securities, investments, assets, liabilities, knowing the difference, that's very important, especially in this very, teeter-totter type, I guess the word now is called a market.
Absolutely. Craig, you have a question for us? Because we're going to be running out of time here in just a second.
Yeah. So I think myself being 33 years old, I'm a relatively young person, and I'm actually really not well diversified in the way of investments. I got a really decent job and everything, does 401k, all that stuff. But the bottom line for me is, for somebody who doesn't have maybe necessarily the most, expansive or educated background on this type of stuff, what is your best suggestion for somebody that's really wanting to start to look ahead to the future? I mean, it seems like I'm nervous for myself because it seems like I'm very late getting into this game.
Well, the most important thing, Craig, is that you just start doing something. And that is, if you've got a workplace retirement plan, participate in it, take advantage of it, and just start doing something. You can't make any progress at all unless you take action. And so we encourage you to do that. I'm going to ask Daniel to get your number from you, and we can be happy to talk to you a little bit more next week in the office and stuff, and just kind of give you some guidance there. But I want to, and Daniel, if you'll just do that, our engineer in the studio, get his number. We'll get that from you, and we'll talk to you more next week, Craig. But you're right. You just really got it in this world. You got to take steps to take action. If we just hide in fear.
Right. Well, I think I speak for a lot of young people that, one, are not people. So there's a book called Rich Dad, Poor Dad by Robert E. Kiyosaki, right? Mm-hmm. And this man talks about the education system is not making children and young people financially literate. And especially now in the modern age when you see a hierarchical, higher tiered percentage of, wealth.
Absolutely.
Owners in the world. They are insulating and preserving that wealth just like you would intellectual property.
Craig, I hate to cut you off, but we're at the end of the program. We'll give you a call back and talk a little bit more. Love to get your thoughts on things. But folks, if you can join us on our webinar here in about 15 minutes at spendlifewell.com/events, or call us every week in the studio or at our offices, 800-491-4508, 800-491-4508. You've been listening to the Spend Life Well Show. We'll see you next week.